I think the best money, when we think about, we've talked about a bunch of these different properties. It's like, how do we fundamentally assess good money? It's like, well, everybody's in this framework of like fiat thinking that money needs to be backed by something. It's like throughout the vast majority of history, money was never backed by something. It was these things that had fundamental properties that were good. It was only once we had paper note issuance that we started coming up with this concept of it needs to be backed, because paper was good at all these things for monetary properties, but it wasn't scarce. So it needed to be backed by something that was. And what makes something good money isn't even necessarily that it's the best at one particular property. It's optimized across all the different properties, and it's the best in aggregate across all of them. So you might find something that's much faster than Bitcoin. You might find something that's more scarce than Bitcoin. You might find something that, is more durable or more divisible. There's all these things that you could say in isolation is better at this, but when you optimize it as a base layer settlement asset, without some sort of new innovation, I don't see a way that something would beat Bitcoin.
Yo, and welcome back to another episode of the Nyc and Griff Show. Today is Wednesday, coming to you with another midweek podcast. Wednesday, January 10th, 5:08 p.m. Griff, what's the word today, baby?
The word is ribeyes, more ribeyes, and more ribeyes for me. Tonight will be a ribeye. Yesterday was a ribeye. Tomorrow,
are you going to have a ribeye tomorrow, you think?
No. So I don't know what people would think about this, especially like the Ben Justmans of the world, because as you know, he's like the pocket steak king. And I love ahi tuna. So I've gotten into like making sushi now because I don't want to spend the money when I go out. And I've realized sushi restaurants are kind of a shitcoin, Nick. Okay? Like you can roll that up and you can put a little like ahi tuna in there, or let's just do it the lazy way. Let's just make a poke bowl and get it rolling. But no, other than that, Nick, no, I've just been grinding like you. Hopefully some good things on the fiat mining front. But how about you, brother? How are you doing?
Man, it's been a good day. It's been a productive week so far. First full week actually back from kind of the holiday season. We had those 2 short weeks. So first full week back. So kind of feels like it's Thursday, but it's Wednesday. No big deal. We've got good things moving. We've got new projects coming in for bid. So, it's all good. It's all good things moving forward. And, on the fiat mining side, it's interesting, right? We expend time and labor producing value in whatever industry we're in with the company that we're with, or maybe we're an entrepreneur and we have our own company and we produce value by expending time and labor and an expertise that we know how to do, right? And we earn this fiat money, but it's actually not money. It's only currency. And, I think the dimensions of money are really interesting, and we got a guy coming on today. We got Mr. Eric Yakes on with us. Eric, welcome onto the show. Happy to have you. How are you today?
I'm good, guys. What's going on?
We're just ready to have a conversation about money, man.
Yeah, let's talk about Bitcoin and money. Officially.
Yeah.
Officially, yeah. I haven't read into any of it. I've been on like podcast this afternoon basically telling people I don't know what's going on with it, but I think it's, from what I've gathered, all 11 ETFs were approved and the price didn't move at all for Bitcoin. So that's hilarious.
Yeah, Bitcoin.
Great outcome. It spikes on the fake announcement yesterday, and then the real one comes today, and then nothing happens, which I've really liked this.
It's a good first topic. Like what are your thoughts? I get a little bit on like the ETF and what it does for Bitcoin, but also are you like a Bitcoin trader? I mean, I don't get the sense that you're like, I trade crypto to buy more Bitcoin guy. Or are you more like DCA, just more traditional?
Yeah. I mean, in terms of like background skill set, I came from private equity. So we invested in private companies. It's like in the finance world, you have like the public guys and then you have the private guys. It's kind of like 2 very different skill sets. One's like trader types. The other one's like trying to build businesses. So I was more on the build business side. But yeah, in terms of like the ETF, I'm not like an expert on the technical details, in terms of how the cost structures work, how redemption works. I kind of picked up a few things, but not really an expert on it. It's, generally what I think about the ETF for Bitcoin, I think it's good in the short term and potentially consequentially bad in the long term. Yeah. Like at a high level, there's kind of like there's two things. There's like the spectrum of outcomes for Bitcoin at this point. I don't really see a world where Bitcoin fails. Like, there was a period of time where like a lot of people were like, it could go to zero. And like, there was a period of time when I was very early looking at it, when I was and sold on it, where I was like, yeah, it's not out of the realm of possibility. And I'm basically at the point where like, it's basically out of the realm of possibility. I think at this point it's scaled too far, for the same way that like, BitTorrent or LimeWire or like anything else that is like can spread throughout the internet, spreads to a certain degree. It's like, you can't put it back in the box anymore. And like Bitcoin spreads so far that the probability of it just like failing is pretty much zero. At minimum, black markets would always exist no matter what. But like, I think that within the spectrum of possibility, I think like our worst case scenario at this point is like Bitcoin becomes digital gold. And that means its price goes up a lot. But I think the innovation is wasted if that's what ultimately happens. The entire point, I think, at the other end of the spectrum is to create a global neutral monetary system. And that'll be the first time in history we've ever had something like that. Basically, since primitive money, before we actually had like systems built out, and it was just people using their own local forms of money. So like, that's kind of how I'm thinking about it from that. And like going back to the point about like ETFs, it's like, well, what does an ETF do? It creates a lot of demand. It creates this Wall Street product that people can get exposure to. That means that Bitcoin's price goes up. But Wall Street really likes digital gold. They don't want a global neutral monetary system. That kind of automates a lot of their jobs, number one, and then takes away a lot of the bullshit that they bump into the market, number two. But like, that's the long term that, most like legacy institutions don't want, for the same reason that like Kodak really never got involved in like the digital camera world. Wall Street doesn't want to get involved in this world. And like, they want digital gold to happen. That's like perfect. They can sell that. They can put it into products. They can have everybody's 401k buy it, and they can charge fees every year on it. So like, it makes the price go up in the short term, but the question kind of becomes like, is that a threat to Bitcoin? And there's definitely a world where it isn't. But there also, I think, is a world where it is, where like you have, close to like 18 trillion, I think, in estimated assets under management of Wall Street firms that have all applied to list their ETFs that have gotten approval for it today. And, only a small percentage of that it would take to really have like influence over the network of the assets that they control. So it's like, how popular is this product going to become with these Wall Street firms? And then how much of an interest are they going to own based off that? And will they be able to influence network outcomes in a serious way? And they probably will be, for the same reason that BlackRock is very influential, like on particular companies' stock prices, right? And like, Bitcoin's up to $1 trillion, but like, I'll give you a good example. When I was working for the first company I was at, we got hired by an activist investor, this big hedge fund that took a stake in one of the largest mining companies in the world. And like, you hear about these billionaire guys who do this stuff, and they run these big hedge funds, and they'll go buy they'll get like 10% of the company. And then they go run campaigns, and they say like, we want to do this one change that's going to like benefit the stock price for us in the short term. And then we can sell our position. And we're going to go talk to BlackRock. We're going to go talk to Vanguard. We're going to talk to all the other major asset managers who also own very significant portions of the stock. And we're going to get them to agree with us, so that the next time there's some sort of tender offering, or there's some sort of vote of what should be happening within the company, they're going to back us with theirs. So it's not just about like owning a lot, but it's like how influential you become with the other people that own a lot. And like, so there's all these outcomes that can occur, and it could be bad.
Yeah, I was like really, so many things to talk about right there, but it's interesting. Like when you start a company, like I work for basically a startup, the need for cash sometimes, because you can sell out of your stock and it's like, hey, I have to wait for these POs to clear to even get the money to go buy more stuff to even sell it. And so then ergo, they need some more money to come in here and get it done. I think when it comes to the ETF, as an American and as a constitutionalist, I just think it's a crappy Bitcoin product. Like once El Salvador or some other countries come out and go, hey, I mean, yeah, you could, I guess, get exposure to Bitcoin that way, or you could just, buy into our Bitcoin mining bond, and we can you can give us cash or whatever, and we'll take Bitcoin out. And it's almost disappointing to me that that's not disappointing. I mean, Bitcoin Twitter is just a fun place to be, and I'm sure a lot of people are there for the number go up aspect. But for me, it's like, how much longer before some of these startup companies start coming to Bitcoiners and going, hey, I need some Bitcoin to like kind of just keep the cash flow alive and keep this company going. I mean, I don't really think it's going to be that long due to the fact that who really wants dollars at this point? I mean, it doesn't feel like a lot of people are really wanting dollars. It feels like everybody's building their exit strategy for getting out of dollars. And a Bitcoin ETF is cute until BlackRock or some of these large financial institutions and I hope, cross my fingers. I hope that Robinhood sells a crap load of paper Bitcoin and we still experience the same volatility that we've experienced over the last 3 epochs. And all of a sudden Robinhood has a bank run on Bitcoin and there is no Ken Griffin to stop it. I like that GameStop movie a little bit, but when you're advising some of these companies, like, are they getting interested in it in that way? Like, are they starting to be like, hey, like maybe we should just back everything we're doing with a better money where we can? Or is it just still a lot of fiat-minded individuals when it comes to that?
Look, I guess there's a lot of ways to answer the question. Like, generally speaking, I think my expectation of what's going to happen here is the wealth that's in 401ks and IRAs, all the financial advisors that are going to start hopping on the bandwagon. Like, there's all these financial advisors out there, like Edward Jones or like Charles Schwab or whatever, that are, they have these clients that they're talking to. And, these guys don't really like know what they're talking about. Like, I think that like a lot of people group like financial advisors in a similar bucket, right? Like, it's like there's a very big difference. Like, there's a bunch of different doctors out there, but there's a very big difference between that general practitioner who tells you to go talk to somebody if there's a bump on your skin, or like, the surgeon who's ripping apart your brain. It's like they have a very different understanding of certain parts of the body, as well as they're more specialized in other things. And like the financial advisors at the Edward Jones, they're like general practitioners. They don't really know what's going on in anything in particular detail. And their job is to basically give everybody the same cookie cutter type of investment approach. What this is going to do is push Bitcoin into the narrative for them. One, because they don't need to bring on new technology to give you investment. One of the main reasons they don't like it that much is because they either have to like take on reputational risk, bring on a new technological provider like a Swan or like a River or something to support them on acquiring it, holding it on the back end that meets certain like custodial qualifications, et cetera. That's more due diligence and everything that comes with that. And it's just like, they don't want to do that work. But now if it's like, oh, it's just a button click away for my clients and their 401ks, they can do themselves, or like if they're being, managed by somebody else, that changes how it's going to become a part of the narrative. And then all it takes is like one financial advisor recommends to his clients, like, okay, like put 1% into Bitcoin. I think that's prudent. And then Bitcoin runs to 150, 200K. And then he gets, twice the amount of clients flooding in over the next year because his, client has just been recommending him to everybody. Yeah. And then now it just becomes a trend amongst all of them. So anything that makes money is cool, and Bitcoin makes a lot of money. And like, these things it's going to get pushed pretty pervasively. I don't know how systemic that's going to become.
Yeah. Well, it's like super interesting to me, like to not hit on too hard on the mining stocks here, but it's almost like mining stocks putting cash into something as an equity for them to be the one selling the Bitcoin and keeping the Bitcoin is almost like a rug pull in a sense. In your mind, a 2-part question here. When did you become a Bitcoiner, and when did you get so smart and like you jump the bandwagon on some of this stuff? But then also, is there a better investment than just spot buying Bitcoin and keeping it solvent and protecting that right now?
I think on a risk adjusted basis, Bitcoin's the best thing that you can buy. Hands down. I think that there's more complex type products that are emerging. I think there's other things that you can buy that are kind of more investments relegated to wealthier, affluent types. That will be on the horizon. I think that like once Bitcoin is in like the multi-trillion-dollar asset category, there's diminishing returns as it achieves a market over time. And to our conversation earlier, I don't know how big its market size is going to be, which is also a really good point to mention. Like Bitcoin becomes digital gold. That's like, we're talking about a $12 trillion market size. It's at $1 trillion today, 12x. Like that's pretty solid. Bitcoin at the other end of the spectrum becomes a global neutral monetary system. We're talking about, there isn't even a way to quantify that return. We're talking about hundreds and hundreds of, everything's being priced.
Yeah. It's just forever.
So like, I think it's going to be somewhere kind of in the middle of those two outcomes, but like, But the potential for number go up, if you are somebody that cares about number go up, that means you should be holding Bitcoin yourself, because that's what's going to make it all happen too.
Yeah.
Like, because if not, you're just going to make a digital gold, and then you're turning your multiple 100x into a 12x if enough of you start doing that. So like that's the whole goal, is you need the revolution to happen for, this to all change and everybody becomes feudal lords who owns Bitcoin or something. But
no kidding.
But what was like the first thing we were talking about before I said that?
What got you in? Like what? You're in the tradition. I mean, you're in the tradition. You're obviously going to be successful in the fiat world, regardless. But what made you a weirdo? Or whatever people call it.
Yeah.
What was it like? Even hard for you too? Because for me, it wasn't too hard because I just got out of school in 2019, and I was like, all right, I'm starting my portfolio. No, I don't believe in diversification. I believe in studying what you buy and buying what you believe in. So Bitcoin for me was like almost. It was relatively easy compared to somebody like yourself you've been around. So like, what was it that you're like, oh, I think I just need to buy Bitcoin. Like, I think that's what I should be buying.
From like an economics perspective, I was always aligned with understanding the problem that Bitcoin solves. From a financial perspective, it was that education that made me write Bitcoin off for a while. Like, I thought, quote unquote, like Bitcoin was a speculative asset with no fundamental value for probably like 3 or 4 years before I really started to figure it out. It was like I was always like a big economics nerd. I think economics is the way. I've always been interested in like philosophical type topics, and economics I think is a way to quantify or attempt to quantify a lot of those ideas. It's just philosophy for nerds basically. And like, I always loved economics because of that. And, I was going to school, I was getting my Keynesian economics type education, and I was lucky enough to have been introduced to Milton Friedman before I got that education. So I would read the textbook. I did my micro, I did my macro, I did my history of economics. And I was lucky enough to have 2 good professors in college too, who were pretty measured and not just like pushing a bunch of shit. I did have professors who were literally pushing shit, and I was like sending them emails like, I don't think this is a fair way of representing things. But like, I was lucky enough to be exposed to information that was good. And I always kind of tracked that throughout college. I was reading a lot of like the Austrians and monetarists and stuff like that. And so I kind of, I knew central banking was bad. I knew that there was eventually going to be like hell to pay for this kind of a system, and it wasn't something that's persistent or sustainable. But I just didn't know. Like in 2017, me and one of my buddies I worked with, this was kind of like one like public market hobby I was doing. We were looking at a way to like short Japanese stocks because their central bank, I think at the time, owned like 20% of them. It's probably way more at this point. But there's like in the US, we don't directly have equity ownership or anything through our central bank, but like over in Japan, they're fucking buying everything, and like it's crazy. And I was like, okay, well, how does this end? I couldn't figure it out. I ended up not shorting it because it's like to short something successfully, you have to figure out a timing mechanism, and like there's no way to really determine what happens. And then when I realized that like Bitcoin is what pops this bubble at a global level, I was like, oh shit, because before it basically, I needed it framed the right way coming from my finance background. Like I wrote it off because I was just like, look, it's some technological thing. It doesn't have cash flows. I don't know how to value it. So I'm going to call it speculative. Everything in finance boils down to like some sort of valuation based on how much cash it's going to produce in the future. So if it doesn't do that, I was like, and I tried to like toss around that for a while of like, how do I figure it out? And I was like, I don't know. Maybe it's worth a lot. I can't value the thing. And then once I had the reframing of being like, oh, this is a new form of money. This isn't like some asset with cash flows. This is a new monetary system emerging. And I credit was like some sort of Reddit post I encountered back in like 2016. And then I was just like, oh. And then when I thought about it from that perspective, I was like, well, it's a completely different thing. This is something that hasn't happened in millennia. And then I went down the rabbit hole, and then I wasted probably a year just like getting caught up in the spider web of researching a bunch of different cryptocurrencies and eventually coming back to realizing that like Bitcoin was unique. And
so the head of economics at Creighton, because I believe that's where you graduated, he was a Keynesian, I take it. I take it that that's kind of what the narrative was.
I'm trying to remember the head of our economics department. I actually don't even know who our head was, but there was a decent amount of it. There was 2 professors I had who were I think it's funny. One of my professors, I feel like, was kind of like closet Austrian, and like that was a crazy thing to say. Cause I remember like I talked to him after hours and I'd be like, why don't you talk about this stuff in class? And he was like very closet about a lot of it, which was
that's literally how personally, like me and Nick were taking a lot of the same economics classes when we were getting done at UAlbany. And secretly, I guess, because I got Nick into it a little bit later, I was like, yeah, so too big to fail is stupid and none of this makes sense. And so actually one of the last classes we took, I think, was money and banking. And it was with like a 4th or 5th year PhD. I can't even remember. And I had remembered I took a class by myself with the head of the economics department, and I did pretty well, but pretty well in that class was like a curve 72. And it was like the second best class. And so then when I went to the PhD's class, he was actually from like China, and he literally didn't speak English, and I couldn't read anything that he was writing on the board. I was like, okay, so I'm going to have to cheat my way out of this one. But I went to his office hours, and I was just like, hey, like, you know, I just took a class with the head of the economics department. I was like, man, his class was hard. Your class is really hard too. He just curves it. He's like, what if everybody fails your test? He's like, he had to curve my 3rd year PhD class. And I was like, so he's curving your grades, you're curving our, everybody's just curving grades here. I was like, who knows anything about economics? And literally at the same time, I got into Breedlove. Like that was back when he was posting a lot of really cool Twitter threads. And he posted one in particular is like, what is money? And it just hit me hard where I was like, this is the answer to a lot of these problems. Now, did I start shitcoining a little bit for a while? Well, everything was going up. So yes, but eventually I just kept learning, and I was trying to get Nick into it. And through like trying to get him into it a little bit and like get him out of where he was at, it was like, like, no, it's kind of a short on everything. I mean, it's like a hedge on everything else where it's like, hey, if these other things don't perform well, I think there's one asset that doesn't really care. Bitcoin just doesn't care. But it's so funny how your economics, it's like they don't want to talk about it. I don't know if like I struggle with like really friends, family members, anybody where I try to be humble about it, but I've read a lot, and a lot of the stuff that they say, I'm like, so who fed that to you? Because if you read one book, like I'll break your entire box that you're sitting in right now. It's so funny. So you started shorting stuff while you were at school, like with your buddies?
Well, I didn't end up shorting anything. This was in 2017. I'd graduated. I was 2 years out of school at this point.
Yeah.
No, I was only really taking long positions. I had a degenerate phase in college when I was speculating on IPOs for a little bit, and that was really fun.
Yeah.
But yeah, I actually did somewhat well in that, surprisingly. I hadn't thought about that since. But no, more just longs. First stock I ever bought was Whole Foods. I really like the CEO, John Mackey. Yeah.
It's interesting. Your approach to investing has almost always been fairly fundamental. But you said Milton Friedman. Like, who do you like and who do you not like nowadays?
That's
a good question.
Call them out, Eric. Call them out. We don't mind. Call people out. We want to smoke.
I don't even like. I mean, look, like I don't know. It's so what I was educated on was value investing. So going to school at Creighton, you're in Omaha, Nebraska. That's where Warren Buffett is. Like that whole, value investing. Like it's probably the reason the Berkshire Hathaway shareholders meeting is like this massive thing that happens in Omaha every year is because it's like the value investor community. So like that was one of the reasons I went to Creighton, is just because they have a really good finance program centered around a lot of that. And I definitely cut my teeth on that type of investment philosophy. And I think that as I've gotten like maybe more, I don't know what the word is, like red pill about finance in general, it's all this stuff boils down to like, okay, so like value investment versus other types of, public market type investing. There's this distinction where, like in this book by Seth Klarman called Margin of Safety, where like you want to minimize the amount of like speculation. Like some assets are referred to as speculative and some aren't. And then the question's like, okay, well, value investors just try to minimize that speculation as much as they can. And there's these different metrics that we can look at. And there are these different ways that we can say like, oh, the price of this is fundamentally much lower. I'm taking a lot less risk on this kind of an investment. And I'm not saying that like that methodology isn't true. It's just, I think what's more persistent than that, or what really how investments work is based on speculative narratives. And I think that like in markets that function in like a free manner with prices adjusting to natural market mechanisms, value investment is going to be a successful investment philosophy. I think in this modern economy, they're kind of, they're swimming upstream because they have to compete against investment narratives and whether they're bullshit or not. And there's all these bullshit things that happen. And then you have to compete with central bank liquidity. And a lot of like the ardent, tried and true, consistent investors lose to people that start playing on narratives or have the influence to be able to do it. So it's like, who are the investors I like? In college, like the first thing I was thinking is just like activist investors. That's where you actually have control over your outcome, but you have to be like a billionaire to do that. And it's like, you look for inefficiencies in a market. And if you can legitimately find inefficiencies, and pretty much the way to do that really effectively in finance is to have scale and to do things in private markets where they're not as public. But like even in public markets, it's like activist investors, like, they can throw around a few $1 billion and take these big stakes and, they own some people in the media and they got some politicians on their side. And like, these guys can make buku money doing that. That's how you fuck up fiat world. And that's what these guys are doing that are really successful. We got to be really rich to do that. Same thing with like private equity returns in private markets, scale and information asymmetry. That's why I kind of got into private markets, is I was like, that's where the most inefficiency exists because there's not public data on a lot of this stuff. So like relationships, knowledge, geographic constraints, regulatory barriers, like there's all these things that you can do and play around that create inefficiency. And you can extract wealth from doing that.
Man, it's really good. All this conversation revolves around one topic, and that's money. How do I get more of it? How do I mine more of it? How do I take what I have earned and what the excess is of, right? I'm earning X amount. I have to burn X amount to consume to live today. And then what do I do with the excess? Robert Kiyosaki's idea of putting your money to work for you, or maybe it's not his, but generally the topic of I want to make more money with the money that I have. And Bitcoin solves this problem, but something Griff and I have talked about a lot recently is you can't really have too in-depth of a conversation about a certain topic if you don't understand what that topic is. If you've not, and maybe not to say that you understand it, but you're at least working to understand it, right? And it's so funny having conversations with people, specifically, it's typically older folks, about what Bitcoin is, why it's valuable, all these things. And they just don't understand. They can't grasp onto it in some sense because there's a missing element of what is the actual fundamental problem. And there's a difference between money and currency. And recently it was, and I don't know that I had known who you were prior to reading your Dimensions of Money article. And I don't remember when you wrote that, but I read that just this past Thanksgiving season. It was, I was sitting out in a deer stand and I was cruising around and I was looking at articles and I happened to run across that Dimensions of Money article that you wrote. I think there's 4 parts to it. And I buzzed through all of them. I was like, wow, this is great. And you put together in this graphic here that we've got up, the dimensions of money through the process of convergence. And man, having studied Bitcoin, I had an idea of what these things were. But whenever I saw you put together this image and you explain it in that first article, I was like,
this is your favorite. Just by the way, this is Nick sends this to every group chat I'm in. It could be a group chat about like, I have a poker night on Friday night I was setting up, and I think Nick sent it to that group chat. He just like sends it to every single one. He's like, do you guys understand this? And they're like, no, I don't understand this at all. And Nick's like, well, let me try to talk to you about it. But the fact that you're here and he can ask you about it is like a celebrity.
Oh, it's sure. I'm basically drooling over here. So Eric, I really want to go through some of this because I'm really excited to send this to my grandparents and all the old folks that I know. But let's just I just want to start here at the very top here, and then let's go all the way down. So money is the most saleable good, and you wrote up here that which has the lowest rate of declining marginal utility will be chosen to facilitate indirect trade. So let's talk about that for a second.
Yeah.
What is saleability, and what is marginal declining utility?
Yep. So saleability was a concept like the kind of the origin of Austrian economist Karl Menger in the 19th century defined money as the most saleable good. It means the good that can be sold most easily above everything else. And when you think about money as just being another good, it's just one that has particular properties that make it really good money, then it starts to make a lot more sense. So it's like it's a saleable good. It's something that if you were to say like, you know, you could have one wish of like an infinite amount of some amount. You'd want it to be money because money can trade for everything else. You don't want an infinite amount of apples. You don't want an infinite amount of cows or joints or whatever. You just want it to be money. It's most saleable. So like, and what that means is like he tried to define it as in economics as in terms of like the diminishing returns of utility, and that's the more you consume something, the more the benefit you get from it starts to decrease. And you can do that. It's like your first pizza tastes great. Second piece is pretty good. Third piece is pretty good. Fourth and fifth don't have the same punch. And by the time you get to like the sixth or seventh, you're kind of like, this hurts or whatever. And it's like, so like that's the diminishing margin of utility. And that's true of pretty much everything that we own. Right. And like, it's kind of the idea of like, money doesn't buy you happiness. And it's like, well, money can get you as close over anything else to that than any other good. And like, it has the lowest rate of declining marginal utility. So like, there's studies from like years ago that I remember hearing of like, they've shown that like anything beyond it was like, I think this was like over a decade ago, but like $75,000 a year in income. Inflation's probably turned that into like 150, I'm guessing now. But anything beyond that really doesn't make us that much happier. And at a certain point actually makes us much more sad. And like those things are true from like it is true that money does have a declining margin of utility for us over time. Once our basic needs are met, once we have a certain standard of living, it's kind of like, okay, what else is this going to get me? It's like fast car. Okay, that's pretty badass. I want that. But at a certain point, like your friends all start trying to use you or something, and then you get pretty unhappy and blah, blah, blah. But anyways, diminishing margin of utility is kind of just like that concept. And money is something that you want the most of because it's going to do that the least.
Yeah. So I guess also like, Eric, what's your favorite part of the old bread and circus? Because we're football guys, basketball guys. Are you Formula One guy? Like what keeps you entertained? Because
do I come off as a Formula One guy?
Just comes off as like it's an easy Google search that you've been involved just a little bit in the whole Formula One thing, and it's becoming it's becoming entertaining. It's becoming a thing. It's coming to the States a little bit more. Vegas had one, yeah. Vegas had a Formula race, I believe.
I honestly, I think that's right. I'm not into Formula One. I don't really know. Okay. I think it's badass. Like I think, okay, yeah. Cool. I was like, yeah, Formula is badass. I don't really watch it. Broncos fan. I'm not a huge footballer, but big Broncos fan. I watch when I can. I'm not like my buddies who are jerking off to ESPN all day.
No, it's tough. Like we had a guy G Money on. He's got a really interesting Twitter page, also podcast, and like the whole thing. And he's at the point where he's like, well, if you're wearing another man's name on your back and that's like one of your biggest, you know what I mean? Like that's like one of your biggest things. It's like, it's all bad. And I had to quietly go like, hey, I've been in a fantasy league for 14 years. Like, please don't shit on my fantasy league. Like we've worked very, very hard to like keep it. But like, it's almost like once you get into Bitcoin and you understand so much about finance, it does make things a little bit boring. Like, it's just like, all right, yeah, no, but like, this is why they're doing that. Like, I can see why they're trying to manipulate this. What keeps you entertained? You got like a hobby? Are you like a runner or like, what keeps you going?
The Jeremy Bentham philosophy of push pin versus poetry. And like, it's definitely a thing, I think, is as you start to educate yourself more and you get more interested in things, the things that you once enjoyed probably don't interest you as much anymore. There's like, he tried to say there's a philosophical difference between like stupid people things and smart people things, basically. I don't know if I agree with it, but in any event, I feel like, yeah, like if you're curious as a person and you start to read about things, a lot of things start to become boring or systematic, or it's not that intriguing to be like, I think it's like life is kind of a game, right? It's like, games are just our simulations of different aspects of life and different capabilities and who's the best at things. But like the real arena is the arena and we're all in it. So like, you just gotta be interested in stuff that's helping us all in the arena. And I think it's, I don't know. I lift. I've always lifted since high school.
Okay. What kind of numbers are we putting up? Are you like trying to put up numbers?
Dude, I'm half the man I used to be. In college, I was a meathead, but
okay. Give it to us. I want PRs.
So college max bench. Well, there's my sophomore year. This is a little unfair. My sophomore year, me and my buddies took pro hormones before spring break, so we were kind of upping it a bit. But like, I think I had 2 plates and a 25 was my max bench. So I was kind of a meathead back then.
Yeah. That's good. How are you a big guy? How tall?
No, man, I'm 5'10". It was funny too because I started with my buddy who's 6'5", and we were both lifting about the same shit when we did this. It was like a 3-week cycle, and by the end of it, he just because his frame is so much bigger, he was doing 3 plates and a 10, and I was just like, "Fuck you!" Like bullshit.
Yeah, you're talking to a guy and put up some weight, and next to a guy that Nick, he's on the leaner side. He's got that lean strength to him, but Nick, couldn't keep up. It is what it is.
Don't listen to Griff. Don't listen to Griff.
No, it's funny though because my favorite thing about life now, seriously, is like every decision I make is always somehow based on that chapter in the book with Safedine, like high time preference, low time preference, and I almost have a tough time. I have a tough time like engaging in a lot of high time preference stuff now. And that even means like starting a new hobby because I literally sit there and I go, am I like really going to do this? Or am I like not going to do this? Like I have to either be like fully committed or I'm just like, all right, I show up and do whatever. Working out, I tell you what, after you get out of college football is like probably the hardest. It's like the hardest thing in life. I like get in there. I do like my 20 minutes and I'm just like, all right, I'm good. And I've already taken 1 ACL injury from playing pickup basketball. So I'm just like, all right, okay, so I can't do that. I do golf. Are you a golfer at all?
I kind of peaked in golf when I was like 26. When I quit my job and did entrepreneurship, I was kind of like, what's like the first expense I need to cut? And I was like, I got to golf. Like, that's definitely the most expensive, least productive thing that I do.
Well, but you watch it all? Are you like in tune with like some
a little bit? I mean, I haven't watched much. Wyndham Clark went to my high school, so I was watching the US Open. Yeah, Christian McCaffrey also went to my high school, so it's been a good fucking year, man. Like the boys are going off. Yeah.
Wait. Where is that? I don't even know where that is. Is that the Bay Area? Are you from California?
I went to Valor Christian. It's in Colorado.
Oh, interesting.
So we actually had a bunch of our football coaches were ex-Orange Lutheran guys, which I know that they have a pretty good program.
Yeah. Dang. No. That's pretty cool. It's interesting to me because golf has a lot more money in it than I think people think because it's about.
I say that all the time. Like it's just like so people are like if you could have been a professional in like one sport, so I go, dude, golf, and you could do it for like decades if you're good enough. And the people you're rubbing shoulders with, it's like you got Phil like getting caught up in insider trading with Carl Icahn, an activist. Like that's not happening in the NBA. LeBron ain't getting caught up in that.
They're not rubbing shoulders.
It's got to be another level.
My first job was caddying. So I'm from Columbus. Like Jack Nicklaus is from Columbus. My dad actually caddied for him at Muirfield Village. So I grew up a golfer. And nowadays I can literally tell people, I'm like, no, like it's kind of like football. Like it's not always direct, but it's like the people you have conversations with kind of elevate what you're thinking and what you're trying to do. And nowadays it's so funny because I'm pretty decent at golf and I get invited to so many things just because I can golf. And it's like, okay,
totally.
I'm going to use that. I'm going to use that just a little bit, but I don't know what to make of the whole, like, is Liv trying to get out of the dollar via like Saudi Arabia money and golf? Like, are they trying to start and take over that business? It's almost a little disappointing. Cause Rory, it's like, everybody says money doesn't create happiness. Like you said, until Liv comes with the $500 million check. And they're like, so you want to keep earning it on the tour or you maybe a little guaranteed money? It's like, it's comically hilarious, but no, live, golf, the whole thing, most saleable good, what actually creates happiness. I mean, I could freeze ribeyes. I mean, I could freeze some.
Yeah, dude. And like you had me going when you were talking about that. That's the move, man. All I eat is fucking ribeyes.
Are you on that train? Are you on like the carnivore kick?
Been on it. Honestly, what pissed me off too when I got into Bitcoin was the whole like carnivore thing was a thing. And like, I'm a contrarian. So it's kind of like, fuck. Now I'm like part of this like group or something. And I was like, I was just a guy who like meat a lot before. Now it's like, oh, there's like an identity for it and like other things they do. And I'm kind of, Yeah, I just like ribeyes, man. I barbecue a ton. That's a hobby, and it's because I eat so much damn meat. It creates a very enjoyable thing in my life. During the pandemic, I got real deep in the barbecue game, and I probably, outside of a few barbecue joints, think I can cook the best barbecue I've eaten.
I'm sure everyone around you is benefiting from that. That's great. I've got my brother-in-law is a huge meat guy. Anything you want, he does it really good, and I'm very thankful for that.
Dude, it's awesome, man. It just changes the game once you put like a couple hundred hours into barbecuing, and it becomes like scientific, and you're not one of these guys it's like an art form. I like this or like that. It's like, no, it's actually a science, and like if you do shit right, it's way better. And like once you get to that point, it's like, this shit's so fucking good. I make the best thing. You couldn't pay me to go to a restaurant. Like when I go to steakhouses that are like, really nice now, it's like, I can appreciate the meat, but it's like, I would rather cook it than you guys because you know how to make shit better.
No, and I do a lot of medical dinners. So it's like a lot of steakhouses and I always just get one and I'm like, mine is way better than this. Maybe it's because of the gear. Have you bumped shoulders with Ben Justman at all on Twitter or like in Denver? Because I know he's from there.
Yeah. Ben and I actually just met like a couple months ago.
Oh, no kidding. That's a good.
He was done. Wait, do you guys know who like Tatum Turnup is?
No, who's that?
So he's another guy in the Bitcoin world. He's got a podcast. He's gonna hate that I call it that. It's a YouTube channel. I don't know. He like interviewed Jack Dorsey and stuff this year. He does like jokes with him. It's like, a comedic thing.
I think I know who you're talking about.
He's the guy with the bulletproof vest. He's like,
yeah.
So he just moved out to Denver, and me and Tatum been kicking it a bunch. And then Ben, he knew Ben, and Ben met up with us one night. We had a hoot, couple beers.
No, Ben's a good dude. He's a pocket steak guy. I don't know about, I told him I would probably hop on the pocket steak game, but I also intermittent fast, like being in the healthcare industry, because we were kind of talking about it earlier. It's really unfortunate because, and I'm not calling anybody out, any of my customers that don't listen to this podcast, they are taught something. I mean, they're taught something from really a fiat perspective where it's like, hey, there's the food pyramid and there's this and there's that. My favorite thing to joke about now, because I spend a lot of time at gas stations, is there's always Pop-Tarts like right next to the checkout station. And I just like look behind me in the line. I'm just like, man, most important meal of the day, make sure you get one of those Pop-Tarts in you. It's going to really like fuel you. It's going to really get you going. Like that's what's really going to change your life is eating a Pop-Tart in the morning and making sure that you get the most important meal of the day in you. But propaganda is like, it's got to be the craziest thing. My whole take, I think that might be, it's not different, but how do you measure inflation just by like M2 money supply? Because my whole thing about inflation is like, it's really just like inefficiencies in the market. Like even Bitcoin will experience some sort of inflationary environment in the fact that how much money, I'm a college football guy. I've been getting into it on my personal Twitter account with a lot of former coaches where they're all upset about the NIL thing. These guys making money. Like they're all like, oh, they make money or whatever. And Harbaugh's kind of taking a lot of flack because he's like, well, if we just allocated like 10% of ad revenue to these guys, we'd be able to fund this thing with like all kinds of like endless amounts of money. But to me, it's like friggin' inflation is everything, but it's also like how much money in a Bitcoin standard, if we would get to that neutral money world and all of these things, how much money would actually be placed in ad revenue versus just building a quality product that lasts? Like it totally fundamentally changes a lot. But what's your take on inflation? Like where are we at in the whole dollar? How many dollars are there? How many dollars exist out there? Like quadrillions? Like at this point?
I guess the first thing I'll say is I'm not like a huge macro guy. I understand it like to the degree I feel I need to understand it for some of my opinions, but like inflation is kind of this abstract concept, which is true of a lot of things in economics, is we have these abstract concepts that we attempt to measure. And the CPI is an attempt to measure price inflation, but it's like, what is, I can break down like, I'm going to break down the situation, I guess, with inflation. It's like it used to be defined as monetary inflation, increases in the supply of money. And then it's like, okay, well, what do we consider the supply of money? And particularly in a fiat economy where everything's like these credit-based derivatives, all of it kind of is. And then we can't measure the euro dollar market. So we really don't know how far spread that actually is. And there's a lot of other things. So it's like getting to like a precise metric is challenging. But we don't totally know. We have some things we can look at and we can measure. We can say, okay, this is kind of like indicative of a change. So that's monetary inflation. And then we started to change the common definition of inflation is more to measure the
prices,
the price level through like a price inflation. But we wanted to, like, you could tell it's like very political because they want to focus that on CPI, consumer price inflation, which means they're, catering to like a particular market in a lot of ways, with that being like the headline form, or like the PCE is technically what the Fed says that it operates off of. But there's different metrics, right? And then there's producer price inflation, and there's all these baskets of goods, and how they're actually quantified gets, complex. And then there's a question of like, okay, are they being academically or theoretically honest with the way that they're attempting to quantify these things? And I think I actually wrote a piece on this years ago that gets into the details, but I think like Shadow Stats they are a website that has like their estimate of if we didn't make all these changes to the way that we measured CPI over time, it would actually be like twice as big today. And I think that there's two ways to criticize that. One, every time they make a change to the methodology that they use to measure CPI, it is always something that pushes or influences the rate of inflation downward. So that's one thing. I think the bigger criticism really, though, is that their reasoning, when you get into the details for why they make changes, starts to contradict itself over time. And it's in those contradictions that it's like, okay, well, you obviously have an agenda of artificially pushing down inflation. I don't really think that's like a debatable thing. But at the end of the day, of like the debate of like, what is inflation? It's more of a question of like, well, what are you trying to measure? Because you have monetary inflation, you have these different measures. These show us how credit is expanding within an economy, where it gets to and who it impacts is different. You guys have heard about like the Cantillon effect. That's kind of that idea, right? That when you have credit get created, it emerges within particular parts of the economy. We live in this very large economy. It doesn't spread evenly throughout everything. And certain people benefit and certain people lose based on how it spreads over time.
Well, we're now talking about inflation, we're getting into, kind of that first dimension or plane of money, talking about, across, right? So we talk about the most saleable good. I like to say that the most saleable good is the good that most people want most of the time in most situations, and which is kind of exactly what you were talking about there, right? It's like if I had to have an infinite amount of anything, you'd want it to be money, because I can transfer that into really any other type of product or service that I might need. But it's got to be saleable across three dimensions that you lay out here, which are time, space, and scale. So talking about inflation, now we're starting to talk about, is something a store of value or not? And you put together those two properties that make up a good store of value are scarcity and durability. Let's talk about scarcity and durability. What are your thoughts on these, Eric?
So, yeah, I guess like that chart, it's just like, to your point, there's all these different ways that people talk about money, the three functions of money, and then Safety, in his book, The Bitcoin Standard, talks about money across the three dimensions. And I think it's pretty easy to map the functions of money to the different dimensions. But then it's just like, okay, well, how do we fundamentally think about it? If something has a function of a store of value, how do we fundamentally assess what's better than another? And once again, these are abstract economic concepts. It's not that there's no precise science to this. It's something that's evolving over time, which was one of the reasons that I wrote my book, was kind of based around that like, I think it's just like people view these properties differently. But to answer your question, scarcity and durability are something that are like at the most fundamental level make something a good store of value. There's other things too. There's other properties that make it a good store of value as well. But within that dimension, the most directly associated is if something's very scarce and it's not going to expire very rapidly, then it's usually something that can store value very well. But if it doesn't have the other properties, it's probably not going to be the best, but it's possible, right? Like there's other things like a watch, for example, has other utility associated with it, but there is this like monetary premium. There's a lot of people that buy watches because luxury watches tend to be more scarce and there's something that lasts throughout time. And you can wear it and you can signal status and it provides a utility that's kind of, phones and having a clock on us at all periods of time of what's the word I'm looking for? Usurped that utility. But nonetheless, there's different things that can store value over time, and it doesn't have to be like full-fledged money for it to do that.
Yeah, I can't remember where I saw this. I was listening to, it was a YouTube video, and this guy was talking about, he had, I think he said he had like $10,000 in cash, and he was going like on he was going somewhere overseas, he was going on a trip, he was traveling or whatever. He had like $10,000 in cash with him. And then he also had a handful of watches that were like super expensive, really nice watches. And he as he's going through customs, they're like, what's this cash? What's all this? They ask all these questions, run through the whole thing, bend them over, check out everything, you know. And he's like, but here I have, you know, several $100,000 worth of watches. And you know, then you start thinking about, well, how do I really transfer this value, right? Because if I want to transfer value over time, right, I need to have something that's scarce and durable that I can own today, I can have today, and it's going to retain ideally 100% of its value over any time scale, right? But then we also got to think about the next piece, which is as a medium of exchange, moving value across space. And I think what's so important on this is part one, being a store of value, has to be done first for something to become a medium of exchange. And it's funny because we know that the dollar right now is a medium of exchange, unit of account, but it is not a store of value. And of course, we could talk about the history of how it was at one point, maybe a store of value as it was backed with gold. And then as they cut that tie, now it's no longer a store of value and it's only a medium of exchange, unit of account. But now we're talking about moving value across space, which gets into the medium of exchange aspect. And those two properties are acceptability and portability. I mean, the structure is so simple that you're putting together. It's almost like, well, yeah, it's got to be accepted and it's got to be able to be moved around the economy. Expand on that a little bit.
Yeah, exactly. It's like, if I think like a good example for, to kind of like describe something like portability within being able to move money across space really well is we typically in history had dual monetary systems. And a good example was when we operated on cattle and salt, where we used is these two dual types of money. And so like a good example is like from the Latin pecus, meaning cattle, is where pecuniary, of or relating to money, comes from. And then from the Latin sal, meaning salt, is where the term salary is derived from. And like it's actually here, another fun fact, the Roman temple of Moneta is where monetary and money is actually derived from. And this was just this temple where a lot of the wealthy were storing their money during the Roman Empire. And they had a god associated with that as well, who was like some woman that I can't remember. But cattle and salt was a good example of how cattle was something that actually could be drug across distance. So like because per unit of weight, cattle was much more valuable than salt. And because the cattle could walk, you could actually move high value over long distances, as opposed to like dragging, 100 bags of salt with you. So it was used for more like long-term, larger type contracts, whereas like salt was something that was used on day-to-day transactions. It was much more divisible. You can't like cut up a cow in a piece. You can, but it'll expire quickly. So you want to keep it storing value over time as well. You want to keep it alive. Whereas salt, you can break it down into small chunks and divide it into very different weights. It was much more divisible. So that was used for like smaller type of transactions during those agricultural periods. But like that's a good example of how salt was more portable within smaller spaces, whereas cattle was more portable over like longer distances.
Speaking of that dual money system, do you think that as we transition, and let's make a couple of assumptions. Let's say that at some point in the future we utilize Bitcoin as a store of value, right? We know that right now it's kind of making that transition. We're actively living through this transition period. Do you think that we see a period where we do have a dual money system where something like the dollar is used as a unit of account, as a medium of exchange, and maybe Bitcoin is used as a store of value? and there's those two separate items as we kind of transition into what could potentially be a true Bitcoin standard world?
So I think this is a great example of a lot of these topics are just so some of these things can boil down to semantics of what the reality actually is. And yes, do I think there's dual monetary systems that exist today, right? It just depends on how do you frame a lot of these things, at what scope and at what scale do you determine something to be money. But there's different types of money. If we're talking about it at a systemic level, then we get into the debate of, are we using the same medium of exchange for something? And a good example of how it's a little bit easier was when we had bimetallic systems as a dual monetary standard of gold and silver, for example. And then today, where it's mostly just denominated, if we're to look at the US dollar based system, then we're just looking at really one form of money. And it's possible that we can go into some sort of transitionary period. It's well, today there's a lot of people that I know who are using dollars and using Bitcoin as money, as a medium of exchange, and as a unit of account. So it's at what scale are we going to call that a dual monetary system, right? Because it is happening today. And that's where all the debate boils down to, that you see on Twitter between Peter Schiff and all these other people are just if some economist ever jumps in Bitcoin's not a medium of exchange or it's not a unit of account, it's it is. It depends on what scale you define something to be material. And it's is nation state adoption material? I think it is. It's none of these guys know either. They're just kind of parroting what their buddies, they feel okay with their buddies hearing them say within academic world. And I think that so a lot of these things are just, it's semantics a bit, and it depends on a scale, and when you see it, and it depends on the person. It's all relative. But if Bitcoin becomes the largest liquid capital market in the world and denominates the majority of measurable prices, then there's no debate to anyone. If it becomes just below the number one currency in the world, there's probably still going to be some economists sitting on the sidelines saying it's not money. But yeah.
No, that's my brain always goes to, because you brought up history, before the Great Flood, in a lot of the religious texts, they were making pyramids, they were doing all kinds of things. There was a lot going on. There's a lot going on that it's probably hiding in the basement of the Vatican or whatever. I always think if vibration technology exists, and the fourth dimension exists, and this exists, and that exists, you need a money that can complement technology, because if you don't, it's too deflationary for the environment. You just start causing crashes that, well, I mean, they might just happen anyway. But how much of the fiat system and what we're in today is inhibiting our growth as human beings? Because everything is fake growth. Keynes, the guy Robert Keynes, he liked to go to child brothels. Okay, so his ideas aren't that good. It just is. It just is what it is. But nowadays, it's you can fool so many people into investing into things that are virtually worthless. They're not worth a lot. And the whole business model of even an iPhone, how often should iPhones really come out? Every 10 years, every 5 years? When do they really make an innovation great enough to actually sell something that new that everybody should come in on it? Now they have this model. Hey, it's rigged up. It's rigged up. It's probably why they don't like Bitcoin, in my opinion, is because you're going to have to start building quality washing machines again, and you're probably not going to be able to sell people canola oil and have them cook with it. But it seems literally in the modern times, this is the worst example. We're not growing. There's no real growth happening, especially when you look at history and you go, yeah, there's definitely some things happening. There's definitely some technologies being developed that we as humans just aren't taking advantage of. I don't know if you have one in particular. I don't know if you've dove down some rabbit holes where you're that fourth dimension thing is kind of cool. Or you're no, I don't know, monopolizing or improving nuclear so that we can kind of be more energy efficient. I always ramble on these things when I start trying to ask a question, but it just happens every time, because it's just history. It just seems we're literally living in the not the worst of the worst times, because we're in America, but if you weren't in America, it would suck, and nothing has actually been brought to you in decades that's actually going to make your life any better. How do you think about, I guess, new technologies that come into the market, right? Because you're in the micro a lot. And it seems like you've made a lot of money and you've been successful in the weeds, if you will, with the regulation and what actually makes some of these businesses go and what's going to make it and what's not. But what is like, do you ever come across like a company, or like even way back in the day when you're like, oh, I'm getting into companies that are IPOing, where you're like, this is too deflation. This is too good. Like, this is way too good. Like our monetary system can't even, it's going to cause too many problems. It's not going to actually model.
Yeah. Like, so yeah, I mean, there's, I think that was kind of part of my like degenerate investor rebellion when I was in college, of getting into like betting on IPO stocks, was just kind of like realizing certain things about markets and how they go. And it just seemed more fun to gamble. And like, there's like fundamentally, like, to bring the point home, fiat money manipulates the price of money. And that discoordinates markets, and there's a capital misallocation. So it's like every day, everybody around the world wakes up, and we all have the resources around us, and we all have the time within that day, and we can all spend it in an efficient way or an inefficient way. If everybody tomorrow went and started, building chairs at the same time, it'd be very inefficient. We don't need that many chairs. And like, it's just a question of like, what are we spending our time on? Yeah. And when you fuck up pricing signals, people start spending their time on the wrong things without knowing it until later on. And then it's not something, the problem is that the costs of it are very implicit within the economy, or they exist within specific areas at times. And it's really hard to, generally measure or say. And a lot of problems in economics and finance persist because the costs of their outcomes are indirect and implicit, I think. So like, that's what fiat money is doing, is it's creating this misallocation of time by fucking up with the pricing mechanism and allowing us to take out loans to do things that we probably shouldn't be doing in the first place. In my book, I cite, I think SoftBank as an investor group is kind of like the epitome of that misallocation, because they're really like leaning into it. And they could be right in years to come. Like, I don't know how this is going to end within the next 5 to 10 years and whatever timeline they're on, but they're getting really burned right now. They raised the largest private equity fund in history, the SoftBank Vision Fund. And like, there are all these news articles coming out. They ran down to Silicon Valley and they had a bunch of Saudi money, and the Saudis are trying to diversify out of oil because they know that the second oil ends, their economy's toast, and they're trying to get into tech, and they're trying to get into all this other stuff. And they give this guy who's just like a gambler a ton of money, with a ton of connections, goes down to Silicon Valley and just starts cramming money down founders' throats. And like, there's news articles about this where founders were just like, he gives us more money than we know what to do with. Like, literally, we only have a plan for so much. We can't spend all this money. And because his fund was so damn big, it was just too big for these opportunities. And he started just cramming it down people's throats. So it's a good example of like,
these dudes
being pushed into that kind of gambling.
They love DoorDash. I just looked them up. They love DoorDash. Talk about, it's like, I was a DoorDasher. So what about my first Bitcoin? But like, where are we going with DoorDash? Like, what are we doing? Like, so this guy, like, it's almost like it's just like, it's a who you know economy. It has nothing to do with what you know or what you can bring to the table. It's just like, who do you know? And you make a lot of money with who you know. And like, that's all cool and everything. I've done well doing that myself. But where does that really get? Where are we going to go with that? Like, where does that go?
Yeah. And I think the idea is that, we've spent a really long time as a society building things that may not be as useful, right? Like, a good example is, you probably haven't heard of, but there was like that app WAG or something that they invested in through SoftBank that like, that didn't do very well. And like, it's fine. Like, in risky early stage investments, right? Like, things don't do well here. These are very risky. We don't know. But it seemed like they had a very persistent form of capital misallocation being exemplified by that fund. And they got burned pretty hard from it recently. And like, I think that's happening all over the world in different things. And like, the people are, there's a big, we don't know what the theoretical measurement of it is, but like, there is some sort of measurement that basically says, here's how much we could have created had people been allowed to respond to prices for the past century. And in that world will probably be very, very different than the world today. And we'd be much further along.
Just like, look at all these companies. How could they be right about all these companies? Like, how can you actually put the necessary time in to be even somewhat correct on a third of what these guys are putting their money in? I personally,
that's kind of interesting. That's one of the bets. Like, venture investing is based around the idea that they're going to be really right on about 2% of their companies, and they're going to be partially right on about a third.
That would work.
And that's kind of how a lot. Yeah. So there's WeWork. That's probably one of their biggest blow ups.
Yeah.
Yeah, like it's not to say that the model doesn't make sense, but it just pushes people down the risk curve, and there's a spectrum of all the riskiest to the least riskiest things you can invest in. And as you start to inflate and as your cost of capital gets increased because inflation starts to become more and more expensive for people over time, then people are forced to pursue greater degrees of risk down the risk curve. And a lot of that is pumping money into early stage technology investments. And that's one of the things that's been, we had the Fed contract monetary policy for the first time in 20 years, venture capital had a down year. And it's because it's mirroring monetary policy. It doesn't mean it's all crap. It doesn't mean that, it's not something that's going to persist and create value. And it's something that's creating value in spite of how it's being manipulated, which says a lot about human ingenuity.
Yeah. Like if you have a hard money, you can't be right 2% of the time. Like if it's at all facilitated in the society, like if there's a hard money whatsoever, I mean, hopefully, like we still need people who have a lot of money to go, hey, I still want to give money to new technologies because I can benefit from it, because that's kind of how a lot of great ideas happen. But it's so funny. Have you watched the WeWork movie with Adam?
No, I haven't.
It's so funny because basically this whole, like, they're just painting him as a scammer, like he's just kind of like scamming the whole situation. But the funniest, because Jamie Dimon was talking shit again today. Like, it's like, dude, every employee that works for your company is texting me how to buy Bitcoin as you're talking shit about it, but then funding ETFs, whatever, that's fine. The whole movie literally boils up to a meeting with him and Jamie Dimon, where Jamie's basically like, would you think $50 million credit line is enough? And Adam Newman's sitting there with $46,000 in his bank of actual cash. And he's like, yeah. He's like, that would be cool. He's like, well, how about $100 million? And I'm like, how about $1 billion? How about $1 billion? Like, let's just give this guy $1 billion. Let's let him do it, because it doesn't even make any sense. And for a guy, like, I'm not a humanitarian. I don't pretend to be an altruist, but it sucks. Like, how many continents, how many countries, how many people in this world are just deprived of even the opportunity to be successful because they're so far away from the money printer that at this point, what talent are we really cultivating out of the way? Like, if there was another Albert Einstein, you better fucking hope he grew up in America or some country that actually facilitates some education and something around it, because it feels so greatly like we're just missing. Like, all we're doing is like, we're missing a lot, and eventually it's going to catch up to you guys. But would you be a gold bug if it wasn't for Bitcoin? Because that's the coolest thing about Bitcoin. Like, is that it's here and it happens,
I think I was a bit more nihilistic before Bitcoin. I didn't think gold isn't a solution. Gold isn't something that can, operate outside of government control in some sort of sly roundabout way. Gold's just a narrative at this point. And that's true of a lot of things in financial markets. Like, when gold was like some sort of zero beta asset, it's like, it's scarce. And like that's fine. Like, you can hold on to it for its scarcity. Its market value is low, but the majority of what was keeping gold around is a settlement asset. In years, prior to like modern banking systems, was the fact that you could call it in and you could eventually conduct some sort of monetary transaction with it. That's just not a reality in the modern economy. To your point earlier, right? Like, the money has to keep up with the technology. And when gold was the form of money and the technology with the printing press expanded and we started having paper note issuance, now we needed money to keep up with the technology. And it did turn into paper to gain those efficiencies. And that was fine as long as it was backed by gold. But once you separate gold from the efficiency of the modern economy, there's no practical way to conduct trade and organization with how we operate in today's world. You can't buy anything on Amazon with it, and nobody's ever going to use it.
Something we were talking about earlier is capital allocation and pricing signals. Something that we've talked a little bit about recently is this idea of you've got kind of this economic layer that's on top of a monetary layer. And in this economic layer, right, you've got microeconomies that in aggregate make up a macroeconomy. And in each of those microeconomies, you've got supply and demand stimulus, right, that make the price go up and down in terms of that unit of account that is the monetary layer, right? And ideally, right, if we have a stable base, if we have a solid foundation with which to perceive economic reality, then we can really make sense of things. But going back to this chart now, right? If something is not first a store of value, And even if something is now a medium of exchange and unit of account as the dollar is, but is not the store of value, you get not only supply and demand stimulus on that economic layer, but also on the monetary layer. So then the question is, how do we really make sense of the economic reality around us if we're not looking through a clear lens? And that's when we start thinking about what makes a good unit of account. Obviously, it has to become a medium of exchange or a store of value, medium of exchange. And then if that thing is also fungible and divisible, you talked about cows and salt earlier, right? You can cut up a cow for sure, but then it expires faster, right? Which comes back to that marginal declining utility aspect.
Mm-hmm.
And it's like this is where it's like things really start to not make any sense anymore, because we're looking through these drunk goggles trying to make sense of what's happening around us, when in reality it's the goggles that we're looking through that is making things so difficult to understand, which is where you ultimately run into capital misallocation. We have to run up that risk scale in order to keep up with what we perceive as maybe as inflation, which again, what is the narrative that's being spun? What is the calculation? How are we interpreting this? But tell us a little bit about divisibility. We don't need to talk about, but what is fungibility in your mind? Tell us about fungibility for a second.
Yeah, we go back to like the cow as an example. So like that's an example of a money that's somewhat fungible, but we know that not all ribeyes are the same ribeye. There's very different
You're damn
quality
right.
ribeyes.
Hell yeah. They're not all the same. No.
Yeah, no. So, like generally speaking, there's a bit of trade you can have between some ribeyes, but I'm very discriminant of the ribeyes, and I'm not just.
I'm sure living in Denver, you are, Eric. I'm sure you are over there. You guys are basically the Japanese over there. You guys got it all.
Yeah, we're Wagyu'd up, man. Yeah. So I'm looking for that Wagyu A5. I'm honestly not even looking for that A5. I don't want a big pile of fat, but I'm definitely like looking. Honestly, probably one of the best tasting meats, because the meats that are the most firm are the ones that I think benefit the most from having more marbling. So like a brisket having like a Wagyu brisket, I think is just pretty next level. But in any event, fungibility is just the like for like of something. And all these things are a spectrum, right? These properties, it's a spectrum of what is relatively better than something else at one particular property. And you might, like the US dollar, it's not perfectly fungible, right? Like a lot of people will value $2 bills more than two $1 bills because they're more rare. We don't really see them anymore. People collect those. That's a little bit less fungibility because people do that kind of a behavior. And so like there's a lot of different characteristics that can make things more or less fungible. Bitcoin's not perfectly fungible either. And that's one of the arguments that people are upset about with like inscriptions and ordinals, is that it could impact the fungibility. I don't particularly think that's going to be a long-term risk. I wrote a long thing on it on Twitter. If you search like inscriptions with my account, it'll probably come up. But
we've had those guys on. It's a fun conversation about nothing. Yes.
Yeah. And look, like I'm not some sort of person with a crystal ball. I don't know if there's going to I think that there is arguments for potential value that can emerge from these things. There's a very, very big difference between what exists today and whether or not that's something that has sustainable demand versus what will exist tomorrow, and how you can use this as a form of Bitcoin. But at the end of the day, I think that Bitcoin is a permissionless form of settlement asset is going to be much more valuable. And while it's not being used as much for that function, I'm sure economics will sort all of this out as long as we let it do its job of what is it most valuable to use this for over time. And a lot of that just comes from like development on the other layers that are going to enable Bitcoin. Bitcoin's not done being innovated yet. There's other protocols that it needs to integrate with. And I think we're actually taking a lot of the cryptographic innovation that we used in Bitcoin, that Satoshi used when he created it. And I think we're applying new, novel, creative ways with other protocols on top of Bitcoin that aren't issuing shitcoins, but are just taking cryptography, and they're like the Lightning Network, for example, and they're taking creative ways of helping it fulfill functions that Bitcoin is not superior at. And I think of that as like different means of payment, kind of going back to our earlier conversations. Like you have the US dollar is our base layer settlement money, but we have different means of payment. We have cash, we have credit cards, we have cashier's checks, we have general checking accounts. There's all these different ways in which we exchange dollars. That's going to be that's happening with Bitcoin right now. And I think that like the Lightning Network, I think Fedimints with eCash is another example of something that could emerge, kind of replicating cash-based functionality within the ecosystem. And I think there's a lot of cool things on the horizon. But to like round it all out with the properties, all of these things are going to be more or less fungible with Bitcoin, right? Something that's more trusted is going to be probably less fungible with Bitcoin than something that's trustless or trust minimized like the Lightning Network. So that is assessed by a market, and the market's kind of like I think that we just need to let the market do its work and sift out what technologies are best, and people just keep building. But in any event, to round this all out with like the monetary properties, I think the best money, when we think about, we've talked about a bunch of these different properties, it's like, how do we fundamentally assess good money? It's like, well, everybody's in this framework of like fiat thinking that money needs to be backed by something. It's like throughout the vast majority of history, money was never backed by something. It was these things that had fundamental properties that were good. It was only once we had paper note issuance that we started coming up with this concept of it needs to be backed, because paper was good at all these things for monetary properties, but it wasn't scarce. So it needed to be backed by something that was. And what makes something good money isn't even necessarily that it's the best at one particular property. It's optimized across all the different properties, and it's the best in aggregate across all of them. So you might find something that's much faster than Bitcoin. You might find something that's more scarce than Bitcoin. You might find something that is more durable or more divisible. There's all these things that you could say in isolation it's better at this, but when you optimize it as a base layer settlement asset, without some sort of new innovation, I don't see a way that something would beat Bitcoin.
Eric, I think we could continue to have this conversation for maybe 6 or 17 more hours. If you guys are watching, you see his handle down here on Twitter. It's at Eric Yates. Eric, where can people find you if they want to get in touch with you? What other resources have you created? I know you've written a book. Where can people find you? What are your resources?
Yeah, I mean, if you just follow me on Twitter, everything kind of comes from there. I'm posting the stuff on there. You can DM me there. And my book's on Amazon. The link to it is, I guess I technically have a link to my website, which takes you to my book. But if you look up The Seventh Property on Amazon, it'll come
Those
up.
links will be down in the description. We'll have all those links down in there.
Well, that's pretty
Eric,
cool.
thanks for coming on the show, man. We appreciate the conversation. We'll have to have you on again sometime soon.
Yeah, dudes. Thanks.
Absolutely. We'll see you soon. Another good one. Another good one.
Yeah, no, I just learned like a fuckload. I actually had this coach in junior college, like my first quarterback coach, because I was a triple option guy, Nick, in high school. And then I got to American River College, and I was like a 35 touchdown guy, but I was also like a 15 interception guy. And so I hated going to film. Because I knew I sucked. Like I was like, yeah, hey, listen, man, like I don't really know the plays, but when I get out of the pocket, I'm letting it rip, and like that's all good. But I had this coach, and honestly, he didn't know shit about football. He's an offensive lineman at K-State under their famous coach, and like he was just working at the junior college. And like God bless these guys that work at these junior colleges that are willing to do it. But he would always come and say, "It's never as good as it seems. It's never as bad as it seems." As he gives me the worst grade on my film ever after we get our 10th win. But he would always say, "It's never as good as it seems. It's never as bad as it seems." And I said this on our last podcast. Talking to guys like Eric give me a lot of juice. Like it's what wakes me up in the morning, because I found the Bitcoin thing. And through this podcast, I get to talk to a lot of, in my opinion, a lot of these guys probably never say that, some of the most intelligent people I swear to God I've ever talked to in my entire life. And I've talked to some really cool people. And it's just like, oh, I'm in the right spot. This is good. This is good. Maybe it's not as good as it seems. Maybe I have a lot of confirmation bias, whatever. I like that I'm buying Bitcoin, and I like everything that he was saying. I have a mission to actually read this year for real, not only just like eat pocket sticks. So I can't actually wait to get into more of his stuff, because it's so cool. I mean, it's honestly, for anybody who wants to just learn an assload about anything, just start a Nyc Griff Show. But if you don't want to start that, take a listen to us. We're trying our best. We're putting it out there. We don't have any ad revenue, and we're never going to take an ad. We just want to talk to people about what they want to talk about without anybody coming in, because Nick and I, we mine fiat just fine. So we're not really looking to do a lot with this podcast on that front, but we are looking to talk to the smartest and the brightest and the best, because they're, I mean, come on, the most interesting people. But that's all I got, Nick. It's never as good as it seems, never as bad as it seems, but Bitcoin might just be pretty good. might just work out pretty well. So I don't know, a little
Hey,
biased.
if you guys are not watching us right now, we've got video on Spotify and on YouTube. Go see us on those platforms. Links are down in the description. And come talk to us on Twitter. We want to have conversations with people. We want to tweet back and forth. We do some shit posting. Sometimes there's some satire in there, but we like to have conversations. It's at Nyc Griff Show, all spelled out on Twitter, at NYC ANDGRIFFSHOW. We'll see you guys next week. Peace.